Dear friends, I welcome you for today's topic for discussion transactions versus events in accounting. I am Professor Muralidhar Prasad, a professor in banking and finance area. I request you to please subscribe my channel and also like my videos and share my videos. The topic for discussion, as I said, is transaction versus events. First, let us understand what do you mean by a transaction and what is an event. An event is considered as a transaction if it brings change to account balance. It is classified as a transaction and recorded in the books. It means if something has to be considered as a transaction, there should be an event, and that event should have an impact on the accounting balance. Otherwise, we don't consider that event as a transaction. Let us take an example. There was a fire accident in event. There was a fire accident in a business. So that's definitely an event. A fire accident is an event in a business. But that resulted in loss of stock. So therefore, there is a financial implication of this fire accident. So this is a transaction because there is a stock loss, and to this extent of loss, the amount should be recorded in books. So therefore, it's a transaction and also an event. Now let us look at another example. A senior employee resigned the job considering responsible for the accident. Since there is no change in account balance, it is just an event and not a transaction. Because a senior employee resigning, yeah, no doubt there may be a difficulty in continuing the activities for some time, but you cannot record this into a bigger books of accounts because you cannot measure this loss. This is only an event. This cannot be considered as a transaction. Let us understand further more details. Accounting depends on transactions because accounting depends on records like journals, ledgers, etc. So to prepare journals and ledgers, we need financial implications. So therefore, accounting depends on transactions. Transaction has got the financial implication. All transactions are events, but all events are not transactions. Because before something you want to call as a transaction, that should be an event. But all events need not be transactions. So events treated as transactions are recorded in the books of accounts because transactions only recorded in the books because they have financial implication. Now let us understand some key differences between events and the transactions. First, let us understand the transaction events. So all events are not transactions. We have seen from the example. An event may or may not bring change in the financial position. Impact of every event may or may not be measurable in terms of money. Let us take a quick example. For example, the death of a skilled employee may bring heavy loss to a business because he is not available to perform, but this loss is not measurable in terms of money. Therefore, it is simply an event. We don't record the possible loss into business transactions. Events may or may not require two parties for the occurrence of an event. We have seen, for example, here the death of an individual. So, yeah, no doubt it's an event. There is only one party who has suffered. Transfer of goods or services may or may not occur for an event. It is not necessary to record any event in the books of accounts if it is not measurable in terms of money. Yes, we have seen this also. And as per accounting principles, we need to prepare cash statement, separate statement for receipts and payments advice, and financial statement of receipts and payments are made. Whereas for events, all this is not possible. You cannot record, you cannot prepare a cash statement, you cannot prepare a funds flow statement, receipts and payments, etc. The scope of the event is very wide. Yes, naturally, it has got two big implications sometimes. The transactions related events are not always supported by evidence. Yes, definitely. Suppose there was a big party in the office, right? Some employee gave a party or the chairman gave a party in the office. That's only an event, and that may not be recorded. It's not possible to record that transaction. Whereas the expenditure incurred on the event, that can be recorded as a transaction provided that is permitted as per the accounting regulations. Now let us quickly understand what we mean by the transactions. All transactions are events. Yes, we have understood this part. A transaction must bring financial change. The financial changes or caused by transactions must be measurable in terms of money. For transactions, two parties are must. As a consequence of transaction, transfer of goods or services is a must, except exceptions like accidents and depreciations, etc. In case of accident, yeah, there is no transfer, but there is a loss of property, and that can become a transaction provided there is an insurance claim, and if the loss is you are measurable and recorded in the books of accounts. And as we said previously, for transaction there are there must be two parties always. Or let us take the same example of the buying and selling. Somebody, you are selling goods. So for a finance for a money value, so there is a buyer, there is a seller. So you are paying salaries. You are a company. You are paying salaries. There is a person to receive your salaries. So all these are all financial implications, and these are all transactions. There are two parties. Every transaction must be recorded in books of accounts since they impact the business, because every one pie you are spending with that has got a financial impact, that should be recorded so that the profit can be perfectly estimated, or the cost can be perfectly estimated. In the accounting process of the transaction, in the first phase journalizing, in a second phase, posting in the ledger, and in the third phase, financial statements are prepared. This is how the process goes. First, we record all the transactions in the journals, then ledgers, then the financial statements are prepared. The scope of the transaction is limited because only to that extent of finance. For example, there is a purchase of machinery. So the transaction is limited only to that purpose. Yes, you have purchased machinery, so machinery comes in and your cash goes out, or your bank balance is debited. So that's how the transaction ends. There is no further impact of that. Business transactions must be supported by evidence. Yes, every transaction we are doing in a business, that should be properly supported by the vouchers, receipts, etc., acknowledgements, so that we can know the exact financial value of the transaction and record it in the books of accounts. So thank you very much. We will be meeting in my next